All right. Hello, everybody. Welcome back to another market close. It is Tuesday, July 9th, 3:46 p.m. We are back once again to close out this market. Today is Technical Tuesday, so we are going to have at about 4:15-ish, 4:20-ish, Jason, our good friend of the channel, who's going to break down a lot of technicals on a variety of different stocks that are very exciting. One of them being the stock that we've got to start off this market close with, Tesla. So Tesla right now at 262, pretty incredible. Lots of interesting things have happened since JPow's testifying at Congress today. And we'll talk a little bit about what he said and if there were sort of any major developments. The TLDR is that he basically said we're going to be dependent on the data. And as soon as the data comes in that's effective, then they're probably going to be cutting rates. But Tesla got to a high of about 265-ish at one point throughout the day. Tesla, 265.6, and then came back down right here, 262. A close above 262 would be pretty incredible for Tesla, given that yesterday a close above 250 was a very important thing. So excited to see that Tesla is now gaining even more momentum. If we go to Palantir here, Palantir 27.57, again, close over 27.5 would be awesome. We did get to play in the 28s for a little bit today, for about basically 15 minutes until we got a hit with a bunch of red candles. But even off that 27.23, rebounded all the way back up and now in the 27.5s. And so that wouldn't be bad if we close at that level. SoFi was at the depths of the bottoms at 616 today, then rebounded here at 638. They got two downgrades, but seems like at 616, the stock wasn't ready to go too much lower. S&P did hit 556, actually 557.18 at around 1 p.m., but since then fell to about 555.85. Robinhood was at 23.27, now at 22.65. Amazon 199. Jeff Bezos did just sell about 2.5 million shares today. Intel 34.79, Alibaba 75, Celsius down a little bit. Snowflake continues to go down about 3%. Apple 228.43, that's an all-time high. And then Nvidia broke out to about 132, now here at 131, up 2.2% on the day. So exciting stuff that we got from the market since the market closed, or since the market opened, and since JPow talked. Now let's get a bit of a summary on what JPow said. At its core, JPow's argument was that we need to eventually loosen or tighten monetary policy based on the data that we're getting. Now, what he insinuated there is that because he believes that keeping rates higher for longer would result in slower economic growth, which is what a lot of the questions were predicated on in terms of the labor market tightening, JPow made it very clear that, yes, even though the labor market is tightening and unemployment went from 3.4 to 4.1, he still believes the labor market is healthy, but he is cautious that the labor market could become unhealthy. The bear case is the Fed waits until a recession happens to cut rates, which is what we've been talking about for the past couple of weeks. The bull case, this kind of soft landing that the market is pricing in to command and maintain these multiples, is not only that AI continues to work. By the way, we got to talk about what Goldman Sachs just recently put out about AI. Not only that earnings keep going, but also that the Fed actually cuts rates before they're forced to cut rates. And if all three of those things happen, which two of those things have a decent chance of happening in terms of AI not going anywhere and companies hopefully crushing on earnings, then the Fed just has to come through. And if that happens, hopefully things are going to get really exciting towards the market close. As GE says, he wants to cut. I 100% agree. He absolutely wants to cut. It's just a question of him having the right data to be able to make that cut. Let's get a recap on what he said and what his thoughts insinuated, and then we'll keep going further from there. Got some big updates on Tesla, Nvidia, and a couple of other stocks in the semi space.
On the labor market, which is interesting because that really signals to the doves that if you're expecting this rate cut in September, you're certainly going to get it based on the trend that we're currently seeing right now. Listen, 25 basis points in September doesn't do much, in my opinion, to where we are in the economy or where we are in the stock market. It's more a gesture that what we've witnessed from an adversarial Federal Reserve is no longer in place.
If it's just 25.
Yeah, if it might even be. No, and I got to tell you, that's a good point, because if we see further deterioration in the economy, you're going to start talking about 50. But collectively, all of that, I just don't see how it brings forth enough evidence to suggest you want to make a pivot away from what's really working in the market right now. And that's the exposure to semiconductors and AI-related technology. I just can't get to a place where I'm going to say, okay, small cap industrials, small cap materials, small cap financials are going to be the place to be over the next 6 months.
Yeah, Jenny, semi-index, the stocks today hitting a new high for the first time since June 18th. You do have the market, which has been largely reacting. Good news has been good news. Bad news, so to speak, on the economy has been taken as reasonably good news, or we wouldn't be putting in these new highs in the S&P and the NASDAQ just about every day. However, Goldman Sachs today suggests that bad news might become bad news at some point for the markets. But then you also have the idea that if it does, and I think that's why the Fed chair talks about risks on two sides, that they're going to cut.
Right. I think that's so interesting because it is this challenge of balancing two risks. We have to see the consumer weakening. We have to see the economy weakening before he can cut to support. I'll tell you what I'm really looking at, though. What I'm looking at, and I think it's interesting, Joe, where you say, like, for right now, nothing should change what's working, right? But what's going to be interesting is when those cuts come, what happens to rates? We're pretty sure, and they should, that short-term rates should come down. Money market funds should come down. The short-term end of the curve should come down. But what I think is interesting, where the conversation could change, and other things start to work, is what happens to the long end. And right now, we even saw over the last quarter, the long end of the curve, the 10-year Treasury tick up. But let's say we get that cut in September, and let's say the long end starts to come down. Then really what hasn't been working, then it could start to work, because then cuts become meaningful for companies' balance sheets, right? They become meaningful for a lot of the stocks that I'm in, where you could almost look at them as bond proxies and say, oh, well, with a 10-year at 4.3%, why would you buy a dividend stock? Why would you buy a value stock with this multiple? But once their balance sheets start to become improved by rates coming down, once there's less competitive threat from the fixed income market out there, then what hasn't been working could work. So I think, Scott, we're in kind of a let's wait and see. Everything's so far just exactly what it should be and what Powell's expecting.
So
now the interesting thing there about what she's saying and why I thought that was really important. By the way, thank you, D Visual Arts, for becoming a channel member. Really appreciate that. Thank you for becoming a channel member. Her kind of argument there is that if the economy were to break, if earnings were not to go that well, if unemployment were to rise, if credit delinquencies were to go higher, which is why SoFi got downgraded today, because Barclays and KBW feels that could happen to SoFi, then the Fed can just cut rates. So her argument here is just like, well, we know that if things get bad, the Fed will cut. We know that if things stay good, inflation should be coming down enough for the Fed to cut, which kind of makes Tom Lee look like a genius in hindsight. I mean, I think Tom Lee, before everyone saw at the beginning, end of 2023, what were going to be the two scenarios in which you could end up with a bull market either way. Either things go amazing, meaning NVIDIA crushes expectations, right? And the market is just like, oh my God, we need exposure. Or things don't go amazing and the Fed comes in and they cut. Now, the way the second scenario messes up is if the Fed cuts too late and things get really bad really quickly, which is what happened during the pandemic, right? Like the entire economy shut down, the Fed cut rates, but it just wasn't enough because the economy was shut down. So like things could get really bad and cutting rates doesn't help. But if things don't get that bad, which theoretically they shouldn't, given the state of the consumer, we talked about how many people are going on vacation yesterday, and we looked at some of those stats. All the Fed has to do is cut rates. And so I guess you could be a bear in this market, and there's plenty of bear arguments out there, but that simple scenario kind of makes an easy argument for why you can stay bullish and why you can kind of defend the gains you had and hopefully try to get more gains going into the back half of the year if the market cooperates. Now, although we're looking at Tesla here at 262, one person that does not believe this Tesla run makes any sense is Bill Gross. Bill Gross is a well-respected person in the banking sector, treasury sector. He says today, Tesla's acting like a meme stock, sagging fundamentals, straight up price action, but then there seems to be a new meme stock every day. Most are pump and dump. Chewy, Zap, and GameStop is one of his old favorites. Zap's stock chart, as someone mentioned in the chat, is absolutely insane. It's up 100% today. I don't even know what this company is. I found out about it today. It's apparently an EV company. Year to date, it's up 231%. Today, it's up 100%. If anyone knows why, let me know in the chat. I actually don't really know why this one mooned today. I would imagine something has to be happening that got it excited. But Bill Gross's argument is that Tesla's, acting like Zap or Chewy or GameStop. By the way, someone on Wall Street Bets just posted their 10,000 shares deep into Chewy at like a $28 average, and so they're down on Chewy. So you got people aping into stocks that Ron Kitty gets into. I don't agree with Tesla acting as a meme stock. I just don't agree with that. And over the past couple of days, as I've seen the run up, this run up does not look meme-ish. I should take that back. It looks meme-ish, but when you look at how fast it's run and how much market cap really has been added and the level at which it's happened, it doesn't feel like retail has the potential or even the amount of dollars and momentum to actually push it that high. I think, yes, there's some retail FOMO. Of course there is, but there's a ton of institutional buying pressure that's helping Tesla get to these levels. If there was this much retail FOMO, I feel like when it was at 140, 150, even in the 180s, 190s, we would have seen this run. This run really started in the early 200s, and that's when it kind of took off. I think that's more institutional than not. And I actually posted something on Twitter today. Let me know what you guys think about this theory. It is probably not going to happen, but I thought of it, and I thought it was pretty interesting. What if Elon Musk on the Q2 earnings, he's not going to say this, but just like spitting it out there. What if he says, hey, we've got a letter of intent from Walmart, and they want to purchase $10 billion of Tesla humanoid robots within the next 5 years? Every single earnings estimate on the street would flip overnight if Elon said, yeah, that Optimus thing I told you was going to be worth 25 trillion and no one believed me. Well, we got our first deal. We don't have the revenue yet, but the potential of the revenue is there if we execute on delivering these robots. I think an announcement like that is needed on earnings in the face of some crappy numbers, because if you have an announcement like that, even if it's just Elon saying something to the tune of this paragraph right here in the context of FSD, maybe the street gets way more excited about what is going on with Tesla and the narrative fundamentally changes. Or maybe the street already knows that Elon's going to say something like that, and that's why we're seeing a little bit of this institutional FOMO for Tesla. No one, is kind of sure of what's going to happen, but I do believe this run-up is not meme-ish. I think the toots are buying in. I just don't think this is retail. And if that's the case, then I think there's some momentum. In terms of selling Tesla here, I don't think selling Tesla makes a lot of sense. A lot of people have been asking. I think if you got it at 225 and you want a quick flip, then sure. But if you bought and you did the hard work of buying when no one wanted to, which is at 160, 170, 180, even below 160, then I think this is kind of hold on and see how it plays out. And the reason for this is kind of mathematical. Tesla's already had 260% drawdowns. To sell at 264 and then assume you're going to get another chance to buy at 160, 150, it's possible. But the idea that you get another chance after you've already had two from 2023 and 2024, it's just tough to believe, especially when robotaxis start to become real, that opportunity would present itself again, barring the entire economy, the entire stock market, having a 30, 40% correction, which is possible, but I don't think that's going to be the case. And so if that's not the case, then hold on for the ride. And the ride seems to continue to get to the upside. And so it seems like it'll be fun. Brad says, I sold a December 420 call. I imagine the premiums on those are good. I was looking at covered call premiums. The $280 covered call for September 20th is paying you an almost 9% premium. Again, the risk to doing these covered calls is if the stock goes above the strike, you can roll it, but you're going to have to, navigate that situation. If not, your shares get called away. The other risk is that if the stock actually falls from the price you're buying at it right now, so if you buy 100 shares at 265, you spend 26 grand. If the stock falls 9%, then you lose the same amount as you would have gained in the premium. So it's really just a question of, do you feel the run has happened too quickly? And the covered call essentially covers your downside because you feel this run is not going to be able to continue. All signs are looking like this run is not stopping. But then again, that's kind of what it looks like before it ends up stopping. And so I think we're going to have to see a big announcement on earnings and obviously a big announcement on the robotaxi event for Tesla to continue doing what it has to do. It looks like we got the market closed in about 15 seconds, and it looks like Tesla's going to make a new record in 2024 and actually close above 260. Here we go. July 9th, 4 p.m. Thank you, everybody, for being here. The stock market is now closed. Someone asked, is my mom annoyed by the cowbell? I don't think she's home for the summer, so I don't know if she hears it that often because she's usually downstairs. But I'm assuming whenever she does hear it, yes, she gets annoyed. So 262.41 ending on the day. Tesla 3.74%. Not bad at all. We'll get back to Tesla in a second. Bitcoin 57,864, up 1.21%. At one point, it was at 58,284. So Bitcoin showing some nice momentum after Germany sold a decent amount of Bitcoin yesterday. The ETFs gobbled up about 5,000 Bitcoin or $300 million of inflows. Robinhood hit 23.70 or hit 23.20 today, right now at 22.60, still up 2% on the day. Amazon 199. Bezos did sell about 2 million shares. Alibaba 75. Starbucks ends the day down 2.4%. Nike, wow, new 52-week low on Nike, down another 1% on the day. Yesterday bottomed at 73, now at 72.48 on the day. Google at 188. ARM Holdings down 1.31%. SMH, the semis ETF, at 274. Nvidia for the day 131.38, up 2.48%. So Nvidia still had a decent day. Palantir ends the day at 27.40, down 1%. We got to play with the 28s. Regular breather, but the fact, again, it still blows my mind every time we see us closing above 27. It's just exciting. It's really, really exciting to see a continued close above 27, and hopefully that continues for the next couple of weeks going into earnings, and we just maintain 27 as a base. S&P 500 555.94 after hours. SoFi, again, it fell intraday to about 615. Now it's 638. So there were enough buyers at that 615 level, but the downgrade by KBW and Barclays definitely got this one in a little bit of trouble this morning as it fell down. Micron here at 131. Let's look at the Max 7 as we end off the day. I think most of them were green or slightly red. Apple 228, new all-time high for Apple. Meta 530, Google 190, Amazon 199, Nvidia 131, and then Tesla right here ending above 262 on the day. The miners on Bitcoin. Okay, so let's look at that. Yeah, they had a tough day as well. I mean, not in a crazy tough day. Coinbase was down, CleanSpark was down, Marathon was down, Cypher was down, MicroStrategy actually held up a little bit today, 0.87%. And then Bitfarms was down about 7%. The good thing was that the miners were down today, but Bitcoin did a nice reversal. So although the miners did not kind of get green until the end of the day, it was nice to see Bitcoin catch up and get green. And now if we can get back to above 60,000, maybe these miners have a lot more momentum built into them after we see Bitcoin back into the 60s. Path cuts 10% of workforce. Okay, so now we know why Path is down. In the morning, we didn't know. We just saw Path was down. So thank you for that. Now we understand why Path is down. Probably it's interesting the market took them down 7%. You would think the market would get excited that they're cutting 10% of their workforce and maybe thinking that they're going to do some cost-cutting measures. But Path down 7% on some layoff news today. Cool. So that's what we got in the context of Path. Now, let me go also to another stock I want to. Oh, yeah, here we go. Walgreens. So Walgreens, along with Nike, both the bottoming out, 52-week lows. I mean, levels we haven't seen in many, many years. It's going to be really interesting. I asked on Twitter yesterday who's bottom feeding on Nike, and really it was 50-50. Some people like Nike, some people didn't like Nike. But unfortunately, Nike was in a bit of a tough situation. Chad is FaceTiming me right now, but we're on the market open. I can't. I think I'm going to answer and just tell him I'm on the market open. Chad, I'm on the market to close right now. So say hi. Hey. There he is, right there. I'll call you after this. All right, I'll text you something. Okay, peace. Palantir, speaking of Chad, they put out an article today, and it's a really interesting article. I'm gonna link it right here. I was reading it, and this was a fun one. Remember, LLMs do a lot of hallucinations. Yeah, they put out an article today for why AIP actually doesn't create that many hallucinations. So this is the one right here. You guys can check out, and you can go further from there. Okay, cool. So that's what we had there in the context of that article. And I'm probably going to make a video on that article because that article was like really, really interesting in terms of, because again, the biggest problem with LLMs that we're seeing is that they hallucinate. And if they can stop hallucinating, obviously that's going to be a lot of value for the broader market. Okay, I've got to pull this up and then we're going to move on. So in about 15 minutes, we're going to have Jason come on and he's going to help us with a lot of the different stuff that's going on with technicals. I know everyone wants to know about Tesla and what's going on with Tesla and if the technicals look good on Tesla. Hint, hint, they look pretty damn good given it keeps making a new high pretty much every day at this point. It's like 6 out of 7 days are green for Tesla. So we're going to talk about that and talk about a bunch of other stocks and what the technicals look like on that. Okay, so let me pull this up right here. This was the NVIDIA upgrade we got this morning from a couple of different banks that got excited. So here's Bank of America's argument on NVIDIA. I wanted to play this real segue into why NVIDIA had a good day and why NVIDIA continues to show some momentum. So let's hear a little bit from Bank of America, and then we'll go from there.
At 1.5% pre-market, two firms raising their price. Really surprising. The assumption is that, the Mag 7, particularly NVIDIA, is probably the most owned trade on Wall Street. What have you found?
Sure. Thanks, Melissa. I think the first thing to realize is that we just went through what is probably just phase one of large language model deployment. Now we are going to start phase two. That's when we will see a lot more optimized models, both getting larger in scope to increase their accuracy, but then also getting a lot smaller and optimized. And that requires a very flexible set of hardware, software, silicon, and that is, I think, the ecosystem NVIDIA is pioneered and created, and they are just at the start of their Gen 2 product, Blackwell, which will really start to kickstart this phase two of AI. So I think that's very important to realize that even though the numbers have gotten very big, we are still at the start of this deployment phase. When it comes to ownership, what our strategy team, led by Savita, have found out is that if you take a snapshot of active long-only fund managers across the US, that yes, a lot of them own NVIDIA, but the weightage with which they own NVIDIA stock relative to its weight in the S&P 500 is essentially just market weight, right? So even though it is one of the fastest growing stocks in our coverage and across technology, it's not actually among the largest holdings in a number of actively managed funds. So we do think.
Now, this was really important because the argument he's making right there is that although funds have exposure to NVIDIA, it's not exposure that is overweight in the broader fund. It's just they have a little bit of exposure to NVIDIA, right? But that doesn't matter because at the end of the day, even though NVIDIA is running, yes, their exposure to NVIDIA continues to increase, but it's not because they have enough shares. It's just because those shares have gone up in value. And that gets us to what KeyBank said today. Again, their argument was Blackwell demand seems like it's not stopping H100 demand, and that the interest for GB200, that demand is continuing to rise as well. And as a result of that, that's why you got NVIDIA continuing to gain some momentum here today. Now, NVIDIA was up almost 5% of the day as JPow was speaking. JPow didn't say anything necessarily that was hawkish, but the more he talked, the more the market kind of felt a little bit more hesitation. And so they sold off NVIDIA, but still ending 2.48% of the day. Now, 3.23 trillion. Apple is the most valuable company in the world at 3.5 trillion. NVIDIA was there about 3 weeks ago, but now Apple is back and it holds that level. S&P 500 right here, 555.79. Tesla 262, and then Palantir 2739 after hours as well. Okay, cool. I think it's time to get into the technicals and see what we got going on. We're going to bring on Jason, and we're going to go through a bunch of different stocks and see how those stocks should potentially perform over the next couple of weeks on a technical level. Jason, what's up?
What's up, man? How's it going?
It's going very well. It's going really
Nice.
good for those that followed your Tesla argument to 260.
Dude, I just have to know, are you a believer or what? What's
no,
the deal on that?
I'm a believer. I don't have a massive position in Tesla, but I love Elon and stuff. And the reason I don't have a massive
We'll
position,
get the celebratory believer then.
yeah,
Easy.
celebratory. I mean, most of my. There you go. I didn't even.
Good.
Most of my portfolio is concentrated in Robinhood and Palantir, so it's kind of a portfolio bet I'm making this year. But it's exciting, dude. Seeing the stock go from 140 to 260, basically on no news. I mean,
well, when we first talked about it, it was buy the rumor, sell the news, right? And so at 190, I mean, it's a crazy situation right now. That's for sure. I'm looking at Tesla's close today. It doesn't look like it's going to stop. I have no idea at this point. I mean, so what I can say is if I read the charts from a technical perspective, I can say if this, then that, right? That's what TA gives us, right? And so right now we're basically getting the if this, then that. Next is higher. So it's very possible. I posted something on X this morning earlier today. It was like this move in Tesla. I mean, first of all, if you were adding or loading in the 170s or what have you, it wasn't that long ago. So you got to think, are those people actually going to sell? Like they were probably not adding that level as a short-term investment, to be quite frank, right?
Yeah.
And so, they're probably, I don't think that they are necessarily selling. It's a bit heated for sure, but when we pull back and you'd posted something, I think I commented, remember Battery Day. And if you do remember Battery Day, the run up into that was insane. I mean, absolutely epic, about like a month or more than a month ahead of time. And it was like 100% plus move on Tesla. Mind you, it was significantly smaller market cap. And then we had a couple 30% drawdowns, but eventually it based out and then took off again. So at this point, it looks it's very reminiscent. I'm getting the Battery Day vibes, which means that this could be higher, quite frankly.
And so Battery Day, what year again was that?
2020.
So it ran up into Battery Day, correct?
Yeah. So it ran up on way ahead of time. And I think here we can find it.
Share.
Oh, you want me to share? Yeah, I can share.
Yeah, I think it's important to kind of see what the technicals look like for Tesla, because this is a run that I don't think a lot of people expected. And now they're trying to make sense of, does the math actually end up mathing when it comes to Tesla having further momentum? So
February 18th, this is 2020, I believe, Battery Day. So February 18th is here, January, February, and this was a big sell, right? Something like this.
Yes.
It was a big heart-crushing blow for a lot of people on this day.
Dude, I feel like I remember this day. This is when I remember I was a senior in college. I remember this day.
We're senior in college. February, I believe it's this. Oh, this is 2021. Let me get back.
I do remember February 2020. It ran like crazy because I had like 15 shares, and I remember how crazy it went up during that time.
Well, we have to go way back.
It was at like $900, which is I don't know what that is post.
Oh, no, 2024.
Okay. So this.
Anyways, we're gonna have to go way back here.
Right.
No, 2024 is today. What am I doing?
Yeah, I think you're talking about 2020. I don't think you're.
Yeah, I'm pretty sure I am. Anyways, it was in this area, and I believe it's like this day. I believe it was this day, actually, something like that. But you get these big moves post earnings. We had a split. Oh, maybe it was over here.
See, the split's kind of make it hard to see.
You get like massive moves. Even this move doesn't look like a lot, but quite frankly, this is 85% run. Let me take this down. So I think the point is that Tesla can do this even from here to here, like 85 something, 90%. And then on the downside, like an event happens, this is earnings selling off. You have like a 30% down draw or drawdown here, 24%. And then another run up into a split. I remember this. This was actually, I believe this was pre S&P 500 inclusion also.
Yes.
And then another 80% run. And then, this is, so my point is that, look, Tesla at that point was a significantly smaller market cap. Actually, this is $100, 140. So it's not, I mean, this stuff happens, right? 125% within a couple months. So I think the point is that know the stock, know the personality, and Tesla, even at this level, has been known to, I mean, just this move here, over 100% move in a very short period of time, 2 months. So this situation here is what's reminding me of what we have going on right now. So,
which is similar because we're up 89% from the lows. It's similar to that 120%.
Yeah, it's very similar. So I think the point is that the personality of this stock, it's very possible. And especially if people were really getting in towards these lows, it's not out of the question to actually see a major move. Let me pull back some of these charts. Let me get this a little bit cleaner. What I did want to say was that from this 52-week high, 52-week low, so this is what I'm looking at right now on Tesla. I think clearly this was that level of interest. We have this is a pattern, kind of like we call it descending wedge, but essentially this downtrend was broken. And you can even take this up to here and connect these highs. So the downtrend is, like, any way you slice it, definitively broken. And we talked very briefly about like fib retracements, but it's really important to understand at least the basics of that, because, you know, in technical analysis, a lot of it is kind of like there's so many people that are in it, that are using it, that it becomes like this, you know, your astrology, right? Like there's so many people that are using the same tools that it becomes like this foregone conclusion. And it just paints the picture itself. So if you're a good bull, you kind of want to know, number one, where a bear is going to step in. Here's where we are, right? So from this prior high, all-time high, to this 52-week low, I believe, to basically this $100 low, we're sitting smack dab in the middle. So what I would say here on Tesla is that, or I'm sorry, on the reason I'm bringing up these fibs is that there's a very important stat that if you don't know, there's something called a golden pocket or golden zone. And that's like the between a 50% retracement and a 618 retracement. And this is, again, it's important because so many people use this that, you know, it becomes something that actually plays itself out. But the stat here, and what's important is that the stat is if you cross a 50% retracement, so if you have a close beyond 50% of that retracement range, the probability of actually going to a 618 is extremely high. I mean, like extremely high. And so that's more like, you know, 65, near 70% high. And that's actually where we're closing above right now. And, you know, my target was that 260 level, and we hit essentially this, it's right here, right? And so what happens now is that here's this prior high, 265.13. If you get a close, if Tesla gets a close over that, this is where I'm saying it's like foregone conclusion. You have an earnings gap. Now, I don't know if you have this or not. So there's an earnings gap, 268, and then we have something called a fair value gap, which is over here. But the probability that Tesla goes into this box is actually extremely high. If we get a close over this 260, I'd actually call it 260, 250. And we basically closed on that today. So what this is, that's $300, man. And I'm like, wait a second. It sounds, you think about it for a second, you're like $300. And then I'm like, well, Tesla, for what's $40 at this point for Tesla? So the thing is, I mean, it's true, right? Tesla at this point could do that in a couple of days. Here we are, firmly closing above that 257.50. So what I would say here now is if you're long Tesla, 257.50, closing above that from here moving forward is extremely important. If you're trading net new, again, it's hard to get into something like this because you look at it and you're like, oh, it's run so much. But you're essentially just looking every day. It's making a higher low. It's making a higher high, literally every day. So I don't actually really have a reason to stop this. But tomorrow, if we're over 265 or basically today's high, that the probability of getting into that 300 level is very high. And last time we were at 2 something, we said 260, and you asked me how soon. I'm like, very soon. And it happened to be this week. Like that, it's the same kind of time frame that we're talking about. So it's probable if that happens. Now remember, earnings are July 23rd, so the end of this week or end of this month. I don't think Tesla actually moves a whole lot. I feel like the earnings on Tesla is almost going to be, like the delivery day, where what do people really care about? They really are caring about this robotaxi day, quite frankly. So even if we get a dip that's bought, it could be something like this where you go up and then you come down and then it gets bought right here again and we're back on our way. It's very possible to see something like that through earnings, but I wouldn't.
Do you think this is institutions or retail that keep pushing it up?
It can't be retail. I mean, not at this point. Tesla's top 10 market cap in the.
So hold on. So for the people that say this is a meme stock rally driven by a bunch of apes, what is your response?
I would have to have like $1 billion to move Tesla $1 intraday, right? Like it's not retail. I mean, retail's participating. It's both.
Huh. That's what I've been feeling. I have not felt this is like ape-like behavior. I feel like this is institutional money that's betting big right now.
Yeah.
Okay,
that
so
Chris? Look at Chris. There's a lot of apes. What's up, Chris?
well, Chris has been saying Chris is not alone. Even Bill Gross, right, the legendary Bill
Yeah.
Gross today, he tweeted that this is a meme stock run, and a meme stock run to me implies retail.
It's a cult stock run, right? So like a cult stock. I think when we talked about it before, we're looking at a clear multiple expansion, right? You know, on the delivery numbers last couple weeks ago, you'd mentioned the energy numbers. I mean that alone, and it didn't even register to me at the time, but you're right? Like the energy numbers, that's huge. That's a multiple changer from a fundamental perspective. So, and then there was some headlines out about possibly licensing FSD, which was always my thing. Like when Tesla licenses FSD out to other manufacturers, that's a game changer, right? Like we really don't care about how many cars Tesla sells at that point anymore, right? And again, market is a forward-looking vehicle. That's what this is. Clearly, institutional and retail is already. I mean, not starting. It's happening, right? So they're looking at it that way. That said, hey, look.
In your opinion, what is the fundamental reason why institutions are buying right now? Do you think it's just FSD or robotaxi?
I mean, not even. I mean, robotics, right? Like there's so much there, right? I think we're at 180 or what have you. Tesla was viewed by the market as a car manufacturer, and we're just looking at the multiple expansion into something that's much greater, if that makes sense.
Right. Okay. What are you looking for that would invalidate the run to 30 on a technical level?
300.
Or sorry, 300. Yeah.
A couple closes, daily closes below that 520, 257 level. At that point, you know, hey, look, the bears are gaining momentum at that point. And so from a daily, I'll just make a little box. Like if this was a daily candle, sorry, trying to be fast for you here. But let's say my red candles are red, my green candles are green. You know, it would look essentially we would have an inside, what we call an inside day, where Tesla doesn't make a new high or a new low. We'd have an inside day very much like that, and then you'd have a following day open below and close below that 257.50 level, and that would be the beginning of what you would definitively say is a retracement. And even that, at that point, what you would do is you would come out and you say, hey, look, where's my base level, and you'd probably be looking right around this area here for a bounce, and that's 220s, something like that.
So last question on Tesla. The short sellers are down about 6 billion. Does that play any role in helping this thing pump harder?
No, I don't. So you want to look at days to cover on that kind of stuff. So how many days to cover do the shorts have? And it can play a role. Like AMD is one of the most shorted stocks, had been one of the most shorted stocks in the market, right? Like there's always shorts like that. It's really going to come down to who is it, right? And like some people have been short forever on Tesla, and they're probably just getting back to their cost basis of their short. So they're probably not going to cover unless it gets even higher. And this is a situation where if you had net new shorts, and I could look at this and be like, okay, this is a situation where we probably had net new shorts or shorts that were covering or initiating around 220. This move here, 200, around 200, right? These shorts cover, right? And that means they have to buy back their stocks. So they're essentially buying, and you get this kind of exponential move. So if there's another tranche of shorts that start covering, it's going to happen at that 265, because they're going to have to be like, oh, our thesis is out, or at least the technicals say, hey, look, we can't really be short right now because clearly the stock is going up. And if you're short in large, it's not. I don't think, unless it's a net new short, the older shorts would probably have to start covering pretty soon.
Do you think Kathy sold today?
I mean, Kathy did a great sell, right? We laugh about Kathy in our group sometimes. I'm props to her. She does well, but
I feel like she sold today. I think she sold a little bit.
she sold at 200.
I know.
I don't, it happens, or two, whatever it was. So, I mean, that stuff I don't really take into consideration that much. I think it really, you have to, what's important is to have your own thesis, right? And to have your own idea and logic about what's going on with the stock. We can come out here, or big names can come out here and say all kinds of stuff. I was on spaces with some big names saying that Apple was probably like their number one short in the market down here. Down here, 166. Like, look, there's zero growth. Why would you want to own it? And I'm over here hammering long. And I have my own ideas and logic. You have to stay the course and believe. You have to be independent in your own belief system, if that makes sense. So people are wrong all the time. I could be wrong. We could be wrong about Tesla that is just going back to zero. Who knows? Or going down to zero. It's just be open-minded, but have your own view, and don't be persuaded really by other people. I think that's what's important.
Okay, let's do. We got a bunch of names, but let's do Palantir next, because obviously this one broke out to some new 52.
Palantir. First time we talked about Palantir, we said 28, right? And I think you hit it.
Well, we needed to cross 27.5, which we did.
27.5, 28 becomes that foregone conclusion, right? And so right here. Where is this? This might not be the same chart that we were looking at before. So here you are, right? So this was that prior high. You need to cross, I think I have 25 something, but this is where we are. This is a weekly chart of Palantir. Do you know patterns? Have you ever heard of patterns? Like, do you know
what a pattern is?
Yeah.
Like a cup and handle? There's a cup and handle, right?
Yeah, there's a pattern called a cup and handle. It's like, here's your cup and, like your coffee cup.
If Palantir doesn't go up, I'm going to have a lot of cups of ramen noodles.
So I'm not a pattern guy, but you have to know what they are because it's like so many people use them. It's really important. So now I'm toying around with the time frames here just to zoom in a little bit. So I don't think this is ready. So you have to know the catalyst of the stocks. I believe I want to ask you about Robinhood too, by the way. Yeah. So here's some, what's important here is like, there's some actual overhead supply. So this little blip. So the last time we know 27.39, 27 spot 39, give or take, is you got 27.50 to be better. I got 65 is an important level. So we've had a couple fake breakouts in the past. So that's what we want to be aware of, right? So right now, this looks like it's a fake breakout, but what's true is that if they can't get a stock higher, it just needs to come down a little bit lower, right? And so on Palantir, I think depends on your time frame and depends on the catalyst. So if there's a catalyst about the stock that I don't know, then that could change this a little bit. But this was the prior highs right here. So 26. I think a little pullback on Palantir to do this one more time would actually be healthy. And so since it couldn't actually crack, meaning that today's close below 27.50, not a good look for this short-term breakout. Still a healthy look for the stock, but for the short-term breakout, not a good look. What this means is that this has to come down a little bit more, collect some more buyers, and then get ready to go. So that's how low. It's going to probably take it to this level, this prior high. It's going to base out a little bit, and then it's going to take another go at it, right? If it can't make this new high, then it needs to come back, and it probably needs to come back lower down to here. But it's gonna try again. That's to me what I see. So give it a little bit. I wouldn't press a bet here. I would wait till you get somewhere around 26.50, see if this holds, and see if the buyers come back in and reaccumulate one more time to try and push this stock higher.
Why is it technically a healthy thing for a stock to reconsolidate before it moves up?
So, I'll look at Hood really quick. So Hood's been a challenging one, quite frankly. You get these really big pushes that are just so sizable intraday. So today we had a big level, like a big deal. Yeah. And we had a big move. And then, this is so fast that the market really can't accept it. So today,
right.
you know, on Hood, oops, sorry, I'm sorry.
No worries.
On Hood, I actually had, you know, we had a gap up in the morning. So this is the session gap right here. So post-market to pre-market, we have something called the session gap. This is actually a really bullish setup. You have a gap up in the overnight session. It pulls back in the pre-market. So that, remember, we were talking about what's important, the pre-market levels, that European session holds and fills this gap right here and proceeds to go to the upside. This is actually a really good setup. And I posted about Hood today, as long as it closed over the 20-day, which this is the 20-day right here, it did. This actually looks really constructive for continuation upside. So this is the same thing. It couldn't prior. It couldn't get higher. So meaning like all of this, it kept trying to get higher. So it had to come back down and collect more buyers. That's what we saw so far. It came back down here, right?
Right.
Collected more buyers, and out of the gate, it gaps up. It pulls back, and then they're still, boom, stepping in. And they stepped in force this morning. I say in force, but like stepped in significantly this morning to push the stock higher. So,
so you're saying it's healthy that it closed above the 20-day because it has room to consolidate at lower levels before it goes higher.
Well, so this is the first daily close over. Well, not the first. We want to see, in general, what you want to see is stocks holding at least the 20-day, right? So NVIDIA is a good example. If you don't know, NVIDIA loves to hold its 20-day simple moving average. Let me turn off these drawings for just a minute. So this gray line, and I'll make it a little bit bigger and beefier, 20-day. So here's the white line on a 20-day simple moving average for NVIDIA. And, you know, you can see how it tracks this. This is your basic momentum view. And just recently we started to get into it. Now I'm dropping in closer on time frame. So it chops around this here this day, open above, retest, and then boom, this is the day. NVIDIA is actually long right now for me. So, holding this 20, if we can have like anything like this start to happen, this is actually really good. So I think NVIDIA, we had Jensen selling a lot of shares. That's done and over with. Even at this level here, there's so many lines, sorry. Even at this level here, we saw accumulation under 122, right? And so that was this last breakout. And they were basically, whenever it got below, they would really start buying it up. And so this kind of price action in this area, you would know, hey, look, this is time to get long, that people are building net new position in here. So a lot of overhead position or pressure here selling. But at the end of the day, this came in right at that last catalyst point here, bought below. We call that the liquidity grab. And now we're firmly over the 20-day here, but we're also getting over this last important level right here. And so the last time NVIDIA opened at 131, there was this massive gap forward. And I think that in this situation, we probably see closer to 139s on a continuation plus from NVIDIA all the way up to 150s, et cetera. And then
you're saying Palantir is kind of in the same zone right now.
Yeah. So this is struggle. So this is healthy, right? If a stock goes like completely parabolic, I mean, without having a base, the only thing I'd say about Tesla is that, look, the thing about Tesla is that we had a 7-month base. So that makes a move like this very possible, right? Over 6-month base, right? A move like this, very possible. We don't have, and if it's just a step higher, like an NVIDIA or a Palantir, which has been like a steady staircase higher, that's what you want to see. You just want to see that series of higher lows. And then once we see higher highs, then we can actually, okay, well, we're definitively continuing.
So either we're looking for the stock to be kind of in a trading range like Tesla was for 6 months, or we need to see Palantir validate the stair steps that it's taking every other.
Yeah. So a real, like, you are breaking out, like we're going, like, do you have targets on Palantir?
I mean,
We're all
most
just
people now are thinking, I mean, I think psychologically everyone thinks 30 is
35.
possible.
Oh, no. So it's going to be higher than that.
Yeah, that's what I'm thinking too. If it works the way you're describing in terms of like a Tesla type of
It's
move.
36. Yeah.
Yeah, 30 around 35, 36. Yep. Exactly.
Yeah. So it's if you get a couple daily close over 29.25, give or take, whatever this high is right here, you're going to have what we call like a low volume pocket one more time, where it's going to be a very short, quick, violent move to the upside. And that's going to fill in this area here. And quite frankly, this is what an options trader really looks for, is these kind of situations where you have something happened here where it's a big pullback, but once we get there and we get over that 29.30, this to fill this pocket in is going to be very fast. Like it's going to be massively quick, way faster than you would think. This is not going to be a short move.
Real quick, someone said, what volume indicators on the right side of your chart?
So this is just the basic volume, visible range volume profile. So it shows me where the volume is being built up, where most of the volume is traded over whatever range, whatever is visible on my chart. So like if I move things around, this changes because it's just based on what's in view. But
So let me ask you a question, Jason. I mean, I know you're not as deep into Palantir as some other people. Prices.
So can I might change here. And I think Palantir might be in a situation where there's people like me. So I say me. So I come from the enterprise. I don't really talk about a whole lot, but like, I would sell Palantir, if that makes sense. So I would like help build the company. So people that are trying to use stuff like that, a year or two ago, I would have told you that Palantir had absolutely no shot in actually penetrating the enterprise. I call it the enterprise because they're government healthcare type company, and that takes a special breed of company to be able to be successful in the government and in government area. And it's very similar to healthcare also. But what they did just recently, opening up like AIP to almost like end user, is probably the single most effective step they could have taken in my mind to actually get a gateway into the enterprise. Because like the next generation of devs, it's almost like giving, Macs to schools, or Microsoft giving Word and Excel to schools. Like giving their tool to the next generation, or giving them the ability to utilize it on an individual basis, that's a big deal. It's a long road.
For those that don't know what he's talking about the developer tool for AIP that they
yeah. Sorry. So it's a long road, but that switch is like one of the single most important switches to flip. It's not something that's going to happen overnight, but again, the market's a forward-looking vehicle. It could start pricing that in like really quick.
So what I was going to ask you is that although you're not like the deepest in Palantir, you know that a company doing 20% growth trading at close to 30 times price to sales, that is a bit expensive. My question here from a technical perspective is, we all know fundamentally that is a little bit much to pay for Palantir, given the stock is already up 70% year to date. Do the technicals care about that at all?
No.
Or is it okay?
No.
So why don't
it doesn't matter where the stock's coming from. It only matters where the stock's going to, right? Like that's what's true. Like the technicals, like they matter in terms of like if there's like things that you can read behind us. I'm having to use a lot of like what we call extensions right now because so many things are at all-time highs. What matters is that if there's prior selling at a specific area, right? But I mean, once Palantir, this is going to be a fast move. It's not there yet. It might, quite frankly, it might be an earnings event. In which case you're just going to miss it from a day trader perspective. And stocks around this price are very hard to trade options with. I'm just going to put that out there. Very, very hard to trade options with because they don't hold option contracts don't hold value. Sorry, I'm talking about options because if you're a trader, you're more likely using options as opposed to just underlying equity. So it's tough from that regard. Honestly, I think that's what's going to happen. This might be an earnings move at this point. So yeah, something could change. But look, what they're doing is,
it's exciting.
I never
That's
saw
exciting.
Palantir in the enterprise. Never even saw them come close. But this is like, it's one thing where like, okay, I might, my eyebrows raising.
Right. And just want to put it out there, guys. As much as Palantir could have a great earnings and then it jumps to 35, as Jason is saying, they could have a crappy earnings and it goes back down to 20.
It could be what we call like the beat and skeet, right? Like beat and skeet is like you beat, double beat, and then they skeet like right after, where it's like, okay, you're in the pre-market and then you're like skeet, right? Like
that's what happens to SoFi pretty much every time.
Yeah. So again, options not the best vehicle to be doing this, especially because when you're buying options around earnings, that implied move is going to be baked in. So you're going to have to overpay significantly for something like that in this situation. But anyways, in the meantime, if it doesn't happen to be an earnings event like this move, I mean, that's a big move. It's side note for anyone trying to trade options. Options are not about percentage gains, right? Like the underlying stock, you asked about Rivian last time. This is a 30% move in Palantir, and Rivian was like a 50% move on the underlying. And I said it was like a regular trade. It's not, it's a $5 move in a stock, right? That's not, options are about net dollar moves. So $20, $30 stocks, not the best for options. You want to be more in that 100+ range, but yeah, this is possibly better off with equity in a situation like this.
Got it. Okay, let's do Apple, because this is another one you called last week that.
Yeah, no, Apple's well on its way. I mean, we're good to go. Well, you don't like Apple?
No, I love Apple. I don't know.
I'm joking. So Apple,
I do think 35 PE for 0% growth is a lot, but but I guess
it wasn't 0% growth.
It was 1%.
It's gonna. Well, okay. So I will say.
No, it was literally 1% last quarter. Like, literally.
Yeah, but then okay. So the
buyback saved them, and then this AI shit is also.
You guys, was Amid an Apple bear before?
No, they're gonna say I'm a Vision Pro bear, which Vision Pro is the dumbest.
You can be a Vision Pro bear. That's fine. But for Apple, I have, to me, as weird as this sounds to some people, Apple is there's gonna be two companies standing at the end of the day of this AI situation, and it was going to be NVIDIA and it was going to be Apple. And so like I talked about this briefly last time, Apple 2nm chips are coming. When that comes out, nobody's going to be behind them. The App Store revenue, massive increase last quarter. I think that's a game changer, right? And it wasn't horrible. And now we're coming into a possible massive refresh cycle with Apple. That said, the market forward-looking, vehicle will overshoot both to the downside and to the upside. So I think we're probably going to be in a situation where we're going to overshoot to the upside. And I think that's fine. You just have to know that that's what's going on. Just because something has gone too far, too fast or whatever, doesn't mean, you have to short it. Things stay overbought and oversold. Actually, the overbought and oversold situations are some of the best trades because they just keep going, i.e. Tesla. So, right. So we had talked about this 228 was that first target really on Apple. After this extension, we're there, right? So we're here right now, right? 233 is the next stop for me. And then ultimate target from a technical perspective, right in here at 240. So I have Apple. You're going to laugh. I don't know if you're going to laugh. I bought over here 250 calls for January on Apple at $65. They're now.
Wait, what year was that? That means that was a year and a half ago, right?
No. That was January, like a couple months ago.
No, you mean at 165, not. Oh, you mean the price of the option.
I bought 250 calls for January at $65. It's currently traded at $9.30 right now.
Wait, hold on. $65 is the strike, or how much you paid for them?
How much I paid? They're $930 right now.
Oh, okay. And
so
the contract was 250. Got it.
Yeah. Its contract strike price was 250. So I'm going to take them down in total up here. But right now, if I get up there, right at this point, I'm like trailing out from here. But as long as we're making these new highs, even today's close, and so what I'll start to do is like that first shot is long dated. Everything else from here is not long dated, if that makes sense. I'm actually pulling in time. I don't want to buy a lot of time here because I know that we're getting to like the peak levels. But for continuation, I want to buy short dated, if that makes sense. So at this point, if we're getting closes over, to me, I said in our group, close over 128, I see this continuing, right? And so what does that look like? It looks like a 235 call for next week. That was just like $90 or something like that. And, you know, for that, that's just essentially this last little blip, right? And then I'll start taking down my January stuff, and it looks like that. That's maximum. You know, again, after this much here, let me get my tools, sorry. So whatever this is, it's essentially just duplicating right there, right? So it's one more run of this. It puts us smack in the middle. And today, this close over 127.50 kind of confirms, okay, we should start seeing that continuation.
And the reason you're saying that right now buying long dated leaps on a company like Apple or
no, you don't want to do it
Amazon,
now.
yeah, and the reason you're saying you don't want to do it right now is because there's already been so much of a run that the time to buy leaps on an option is when the underlying, or on an equity is when the underlying hasn't actually run.
Right. So you want to do when it's a 60-day sideways price action. So leaps or anything long dated, if you don't know, longer dated option contracts are more susceptible to volatility than they are price action. Believe it or not. If you know about Greeks, you can look at something called Vega, and your Vega is actually higher than your delta, which means that it's going to move more with volatility than it will with price. Get that, right? So that's not the time that you want to do it. At this point, you're probably high IV, but justifiably high. So again, this just means options are priced based on the probability of something, you know, expiring at the money in simplest terms. And so like the more time that you buy after a move like this, well, the probability becomes high because the pricing model of options thinks that, you know, it thinks that this is a normal move for Apple. It thinks that Apple usually moves 40% every 60 days. That's not right, right? And so those would be overpriced for sure. But when you have a situation where the options model thinks that, hey, look, Apple only moves $9 every 60 days, that's what this is priced for at that point in time. And so that's when you really want to step in. So anyways, sorry, but that's a rant.
Yeah, no, that answers my question. That's what I was curious.
Does it? Okay. So again, that's why right now, probably not the best idea. But you know, if you want to take a stand, and let's say that's just me, right? So if you have a different perspective and you think Apple's going to 300, well, why not, right? And it's worth the risk for you. Do you, right? I'm just saying, from a technical perspective, as a trader, a trader's job is to take a very small piece of an existing larger move. That's all our job is, right? Our job is not to capture all of the upside or all of this or all of that. Our job is just to take a very small piece of something that's already in action or already happening. And so to that end, you know, my small piece from here, it's just this little blip. And that's a trader, right? An investor, completely different.
So what is the logic? Your calls are up 2,000%. What is the logic for holding them?
Not so at that point,
like why aren't you selling those right now and taking the profit?
Because I don't have a new low, right? Like I did actually sell a bunch here. So I sold a bunch here, 220, and that was like main target. But now I held, and so now we're continuing on. There's no reason for me. This is like Rivian, right? So I sold like 80%, but now I'm actually looking at it. I'm like, whoa, this is starting to go again.
You know, it's kind of the experience I had with Robinhood, where I sold some of my 2026 options, and then at $13, and I was like, well, this thing is not stopping, you know, and I got back in.
So Robinhood's, I mean, like I said, the smaller dollar underline is very hard to trade. You really need to buy on a smaller dollar underline a lot more time than you think you need. A lot more time, for them to really work. But it's very they're not trading an Apple or $150 stock with options is actually significantly easier than trading a smaller $20 stock, even though it looks cheaper. But were you asking about my thesis on Apple?
No, but you might as well tell me.
No, we don't have to go there.
No, let's hear the 30-second thesis.
I mean, can you see this? I don't know if you can.
Yeah.
It was basically, look, so here Apple earnings. So I was already building equity. So we have long-term trading in our group. So this is equity adding. And if we dip more, I'm like, okay, we go. So basically net. So coming off a down 5% quarter, Tim actually gave 1 to 2% forecast upside moving forward. So I would impute that forward. That's like 6% by the end of the year. So we would go from a stock that makes no money to all of a sudden we're back into growth. And then inside that growth, it was really this, right? So why is that not low single digits? Yeah, so this was confirming. And this was aside from the services. Sorry. Services up 14% over the last year. Revenue's down, but if this changes, right, then all of a sudden we have a different story moving forward. And then knowing that, hey, we're going into WWDC, here's our catalyst watch, etc. And where we're done, right? So I was actually looking to add into strength over here. I never got it, so I just had to continue on with what I had.
So at that 170 range, you felt it was massively oversold, basically.
Not oversold, undervalued.
Okay.
So undervalued.
What's the difference? Because if the stock is undervalued, wouldn't it be
multiple? The stock priced for a non-growth, you would look at 165, 170. You look at Apple and you're like, stock has done nothing over the last couple years or whatever, and it's just like the hate is over, right? It's overrated. Same thing with Tesla at 170, right, or 180, whatever it was. It's like you look at it at that point in time, and the market starts to value a stock at that point for what it is today. But that the market is really, it's a forward-looking vehicle. So something's going to change. Now you just need to identify what are those things that's going to change. And to me, in the back of my head, it's always been this 2-nanometer chip, which still hasn't even come out. And then again, WWDC, knowing that Apple, nobody had a direct-to-consumer AI play. Apple's not going to miss that. Right. And that was part of the whole thing too. Apple's not going to miss that. Everybody else's AI play is enterprise. So it's B2B, right? Or, et cetera. There was never any, look, Nick's fuckers in here. It was never nobody else had this play aside from maybe Meta, but Meta is going to be a hard one to go after. I think Meta is more of an advertising situation.
Yeah, that's fair.
Which could be really good moving forward. Right. All-time high, I think, by the way, on Meta.
Yeah, can we go to Meta next? Let's do Meta.
Yeah. So let's just say, I'm going to say one thing. All-time highs are not usually bearish. Is that fair? Is that a fair statement?
That is very fair. That's a very fair statement.
And so we are at all-time highs on Meta. All right. It's not usually bearish. But what people tend to do is they do tend to sell when things get to 52-week highs, and they do tend to buy when things get to 52-week lows. So just know that as an aside. For me, so what the situation that Meta is in, this is just a daily chart. So I only need to look at what's most relevant. And so I'm moving this chart over just a little bit. What's most relevant from this last earnings here, and this is earnings. So this is our catalyst watch. Your Meta is a steady staircase up. So higher highs and higher lows. And, if you don't know, that's how Meta does, right? When she just is like some of the steadiest moving stocks. So when you have a stock in what we call, this is called like a channel up. So it's just a steady staircase up. Where do you buy and where do you sell? You expect it to respect this quote unquote channel. And so you want to buy at the low points at the bottom of this channel. Or if you get a small move, if you get the midpoint of these channels, you can get that extension. It's not until it falls out of the channel like this that it becomes wait a second. But it's not necessarily a short, maybe for a couple days, was 1, 2, 3, 4 days. And then it'll find its bearing again one more time. And so honestly, that's how I see Meta right here, right now. And the last trade I took on Meta was actually right here. So 493 just here. I took 540. They were crazy. But extending out of this channel, Okay, so right now that's probably a bit much. And this target here on my end was really just this consolidation, right? From here to here, that was the consolidation. I had about 240. I posted this on X, actually 240 plus for the target. So where do you go from here? I think, if you want to take that same kind of logic and just say, here's your current prevailing trend, what you want to see is you want to see Meta respect at least the center line of this trend. And so what that means is you're going to take these highs and really just right there. So right here, right now, it's possible. Your risk to reward is important when you're trading. Your risk to reward is not as good as it was when Meta was at the bottom of that channel. Does that make sense? It just wasn't. But it's possible that this has a continuation here. And this prior all-time high is going to be the key tell, right? And so when I drop down into a smaller time frame, let me get to a 1 hour. Maybe we can get it on view. So this, and I have extended hours on all my charts because I believe if it traded there, whether it's pre-market or post-market, it traded there. There are buyers, there are sellers. That's what matters. And so this is an all-time high, 531.45 all-time before this most recent run. So what I'm looking at right now is possibly Meta coming back in to retest the center line of that channel, but also the prior all-time high. So now I think Meta can start to reaccumulate net new buyers if they think that, hey, look, I think that advertising might have another wave up to the upside in the near term. So inside this, we have a low, we have a higher low, break, and what we call base. So I think at this point, if Meta, so all-time high 531.45 prior all-time high, and today's high is going to be important right now, really 535. So I think if you get a close over 535, then you get that continuation to 550.
Yeah, and they got a couple upgrades to like $620.
Yeah.
Well.
So again, trader, right? I need to just take that one small piece of an existing move. So I could say, yeah, I could get there. So like, at least if you're saying there's an upgrade to 560, you said
610. I got upgrade.
610. Good
Yeah.
God.
People are bullish on Meta, dude.
Yeah. I mean, hey, look, it could get there. It could get there, but I won't start looking at that until I have something else that tells me, okay, I should start targeting that level. And like I said, for now, I'm really just targeting right in here, this little area, and that's 550 to 555, give or take, for the next move. So that's really gonna trigger. I mean, it looks like it's building right now, but this move, this massive single day move, again, it's too much. When you see a big move like that, that's a 6.5% day, $35 day, single session day for Meta. That's a bit much to have the market really digest. And so even this, if I just pull this back, look, man, I have some added confluence here. This low. So what I just did, I went from this low to this high, just that one day. And what we've done is we've pulled back 50% of that move. And so to have this base out here now is healthy.
Right.
Meaning healthy, like we're going to accumulate net new buyers ideally, and then start to continue on to the upside. This is completely invalidated below 522, right? Which is going to be over here. So, I mean, what worst case, and this is a little bit scary, and why I wouldn't take this trade just yet, because you want to see it start to make another high, is you have this, you have another little pocket here where it looks like on my screen, there's no sellers got to sell at all in this area. So I might take a shot somewhere around there, 522s. Actually, if this doesn't, either it's going to go, and it's going to go, meaning like we have a confirmation over here, or I'm going to see it come back down, and it's going to come down here, and then I can see a base, and then I go, if that makes sense. But
Right.
This is a little concerning, this little, what we call a volume gap. Some people call it fair value gap, but it's just like a volume pocket, low volume pocket, where the market created something called an imbalance. And so, meaning like nobody had the opportunity to sell Meta in this little area, 5 to 522.89. I think this is going to become a very important level. I would mark that on your chart, 522.90. Actually,
Okay.
I'm gonna do that right now.
So let's do a couple more, guys, real quick before we move on. Jason's Twitter is in the chat. If you want to know more about him, what he offers, Discord, programs, all that stuff, you can check him out on Twitter, and all of his links are in his Twitter bio. And you can access more of Jason from there. Can we look at Carnival Cruise? Because some people are excited that vacations are.
I know Chris was all asking about Norwegian too.
Chris has got God knows how much money.
I do think Norwegian is probably a better operator, right? But anyways, oh, Chris. So last time we talked, we had an event here that was the hurricane, right? So hurricane announced, hurricane landed. But the stock, it was very similar. So this is almost what we just looked at on Meta. I was like, okay, we can come back.
By the way, Chris disagrees that was a hurricane. He says the 10-year went up. That's why it fell that day.
This was not a hurricane? Okay.
He says it was the 10-year.
You know, I think Chris is all over the 10 years tomorrow, by the way. That's going to be a big deal. So we have 10-year note auction tomorrow. Always 10 and 10-year, 2-year, always important. So two things. So one, swing low, swing high. We have confluence here. 50% of this move we pulled back, regardless of what was happening. So the reason technicals are important is like I can know a lot about a lot of stocks, but I can't know everything all the time. The technicals we first talked tell you a story. And if you learn to read them like a book, it tells you, okay, something happened. I don't know what it was. I don't need to know, but the price is telling me something important happened, whatever it was. But I want to see, where is this going to come back to? So today we had this move, I think on Carnival, we talked about this level. So this level, 1792, it's a close above. You got to it. You didn't close above today. It's very close. So I would actually be, if this couldn't break, then at that point, you probably need to come back down a little bit more, right? And you probably need to come back down to 1650. But if it does, what it's going to look like is it's going to look like an open above tomorrow over that $18, right? So if you get an open above 18 and the first hour or so trade, it doesn't try to come back down, then you're good to go, right? That's what you're looking for. So next day open above, and the first couple hours is good to go. To Apple E sell off to 209. Yeah, okay. To 209, great example.
I think he's trying to say that hurricane is similar to the Apple EU news sell-off.
Oh yeah. So the thing about, even if it was a hurricane, I would actually really like this, because hurricanes that's a temporary situation, right?
Right.
So we know that the story is going to come back. If it's a 10-year, I still think it's fine, because the 10 years probably peaking out anyways. So that's what you're looking for on Carnival. To me, first stop is going to fill this. What we just mentioned was that imbalance, right? So up to 1870, that's going to be a quick move, a very quick move. But then at that point, you need to see what we call this break of structure. You need to see this continue to make higher highs. Right now, you're good. You have higher lows and you have a higher high. So this is in a current uptrend just from this, April. From April, you're coming back into. So that said, we're going to zoom out, look more like weekly. It looks like we would call this accumulation. And so, man, is this thing beaten down so bad?
It got hit over COVID. It got hit badly.
Yeah. Well, then they did some offerings too. So I can't really look at this because they got a lot of bailout stuff. So this is not exactly relevant so much anymore, but for now, even in this, it's going to bang up against this 19. I'm on a weekly scale at the moment. Let me drop down a little bit by a little bit, see if I can find. So this is going to be a big deal. What is that? Oh, it is a big deal. 1870. It's this order block right here that's jumping out at me. I can pull this across. Yeah. This is a good
question by Jeff. Is this a candidate, do you think, for leaps if you thought there was something fundamental, given how beat up it is?
Yes. So I can just look at this. So the option pricing model is something it assumes that volatility is static, right? It assumes that standard deviation, that stocks always move in this area. Net, because of exactly where Carnival is at this exact moment, even if it was at 18, 19 bucks, you could look at a chart and you could say, well, the stock market thinks that Carnival has been at 8. Is that long? 1,000 days. So like over 3 years. And so the stock, the options don't think that it's going to be that big of a move in general, aside from specific events like earnings events. So Thursday, so September 26th, this shows as the next earnings. I'll look at Thinkorswim. That's what I'm using. And I'll look at August. So September 20th expiration, or we call series, every expiration called series, it does not have volatility built in because the earnings are scheduled for 26. So that's actually right in front of. And then everything after that, you start to get a little bit extra IV, but it's really not built in that much yet. So even this, is Chris buying those 22 calls for January?
Chris got
Chris all over. Did he buy 22 calls for January today? Because that's how many of those traded today. It's a standout contract.
No,
so if
I
you look
at
at
today, but he at 14, that's when he started getting a lot more into the call.
Yeah. Okay. So I'll say this is not super high vol in terms of. So when I say vol, you guys, they're actually at the 34th percentile. So if volatility was a range, 100 being the most expensive that they have ever been, this is 34%, 34th percentile. So it's lower half of their historical average. And so when you do look at volatility in general, it's important to know that just IV doesn't matter as an aside, as a standalone number. It's only relevant unto itself. So compared to itself, it's in the 34th percentile of volatility, meaning of how expensive or cheap they are. So it's not unreasonable.
No, that makes sense. And again, when he looked at Leaps for December of 2026, almost 3 years of time when the stock was at 14. And so he got a decent price as the stock has jumped.
Yeah. I mean, well, I would say, so remember that first statement, options are priced based on the probability of something expiring at the money.
Right.
So the more time that you pay, the more time that you buy, the higher that probability of expiring at the money is, just because there's more time. So you pay up for that. So really you want to find that kind of happy medium. What's not too much time, but just enough time. And it's usually a little bit more than you actually think. So you want to overstate that. But that said, yeah, I think that's an important note. Just know. And then look, somebody's on, maybe this was Chris, January 2250 strikes for Norwegian. When I look at option contracts, I look for volume. I don't really care that much about what open interest is. Open interest is how many were open or owned coming into today. Volume is how many were traded today. And so open interest isn't that important, because if I'm looking at open interest, well, that just tells me that I'm already late to the party. If that makes sense, they've already done it. Volume, on the other hand, that happened today. And so these are standouts today. Volume on Norwegian, January 2250 calls, 3,631 contracts were traded today. The open interest, meaning how many were already owned coming into today, or held coming into today, 5,900. So that almost, it's like over, what is that, 60% more traded today than were already open coming into today on Norwegian. That was already interesting.
Let's end it off with Nike, because this one is causing a lot of controversy.
I was looking at Nike today. This thing is just a dumpster right now. Honestly, I started to take a shot today. I was about to take a shot, and I was looking at
like a shot of tequila, or
no. Actually,
like that bad?
I was gonna go long, but I couldn't. Like, it didn't confirm for me. So we always say the close, right? So if you're a swing trader, funny note, you have an edge of buying at the close and selling towards the open. Options are least expensive at the close of trading every day. And so I was looking at this. So this was yesterday's low. I was looking to see, can Nike actually not go lower? So remember, if they can't push it lower, they need to go higher, right? And so I'm like, okay, it's holding. And I think for a minute it was good, and then it wasn't. And it just like, no, she's going lower. So
what price did you want to see it close at? Like 75?
I wanted to see it actually close over 73.10, not that much. So 73.10 would have been right here. So that would have meant that definitively today would have been what we call a double bottom. It was not. But it's a setup. So that's the thing. It's just because something gets to your level doesn't mean you take it. You watch, right? So we set these alerts as traders of something comes into our price, and you watch. I think Nike can become interesting just because of maybe the Olympics, which are at the end of the month. So that's why I am actually.
But hold on. Why does that argument? A lot of people are talking about that. Why is the Olympics some big catalyst for Nike?
I mean,
that's not like going to increase their sales so massively that like it's their brand.
They're so toasted though. Like this is so bad. This chart is absolutely horrendous. So it's just like, does the market? I don't really care necessarily from a fundamental, like, so what you need to know is like, okay, so what the market thinks and what's true are not the same thing, but what the market thinks is actually what prevails. Does that make sense?
Right.
So, you know, they're going to spend a lot more on advertising, etc. So today we filled this. So this 72.50 is a legitimate, what we call a session gap from this last earnings report. 72.50. This is a hard gap. Clearly, there's absolutely no, this is after hours trade on. Absolutely zero trade happened in here. So at least we have filled this, what we call imbalance. So 72.50 for me now becomes like the next level. Again, just because it happened doesn't mean that I want to take it. And then this right here, holy moly, is that really what that is? That's 63.38. I mean, that feels really low, but that's what that is. So what I'm looking at, this is on a smaller time frame. And we had to go back to, this is where history becomes relevant. It's so far over. Oh my God. Sorry.
I think it's back to like 2017-ish or something like that.
Is it really?
I think so. Or 2020-ish.
2020.
Yeah.
So this area becomes this area of interest right here. And so these are the absolute lows here. $60 is a hard, you can't be in this stock below 60. But if this is the last low, and I really believe that Nike, and I really, really believe Nike's going to go back up, and it's not like Ruru, Lemon, whatever, and on's not really a thing, then it has to be a higher low locked in right around 63.30. Has to, because it cannot make a new low below this, like decade low. It cannot. And if it does, well, then it's probably going to be ugly. And if it does, yeah, then we definitively go back to 50s.
It's interesting. It's very polarizing. A lot of people on Twitter are 50-50. I mean, some people love it. Other people, there's the wokeness stuff that's kind of turning people off. The Lululemons, the on. I
mean, yeah, Nike's not a stock that I would want to own per se. I mean, I feel like I'd rather McDonald's over Nike, but yeah, this is an ugly looking chart. Can it go lower? Yeah. So remember, it doesn't matter where it's coming from. It just matters where it's going, right? At least in this one, we have some historical levels. I think actually here, 72.50. We would call this a price of interest.
Can we actually end on a stock that had a breakout after like 2 months, which is Intel? Are you long Intel at all?
I closed my Intel.
Oh, so you were okay. So you had some Intel. There we go. Okay.
I got Intel 33 calls for July monthlies at $30, and I posted it. So they also got an upgrade here. I'm looking for my feed. I think it was here.
I mean, that thing's been in a range from 29 to 31 for almost 3 months.
Yeah. So this was the trick. Like at this point, it's very similar, right? 31.65 close above. You're definitively going higher. We talked about simple moving averages recently. This, and we talked about them in terms of when simple moving averages are very tight, right? That's when you get this massive explosion. And this is as tight can be.
It was tight. Yeah.
I mean, they're literally sitting on top of each other. They're almost as tight as Dell, by the way.
But outside of it being tight, you did believe fundamentally Intel was not like a broken company or anything.
I don't want to own Intel now. The only reason I would own Intel, no.
But what I'm saying is, like, Intel couldn't be a shit company for you to do this trade, or it didn't matter. Okay. Yeah.
So as a technician, the technicals tell me something. Like, they told me that right now we had an imbalance. So early on, thinking that something's overvalued, or I don't like to own shitcos. I don't really go dumpster diving much. That's true. I focus on things that I really believe in, and have if I can marry that fundamental story with the technicals and have a catalyst, those are the ones I have higher conviction on. That's the ones I really like to do. But for something like this, Intel, this is just a simple price action. Right over its 20 and 50 is this breakout over 3150. I think what I saw. And again, remember we said as an options trader, you got to know it's very important to understand volatility. And I could easily look at this very quickly and be like, look, 70-day consolidation, the options are going to be very cheap. And the technicals tell me that there's a massive move happening or about to happen with this type of what we call squeeze.
But the only reason that move happened, as you said, is because the company got an upgrade. So wouldn't
this happened before the company got an upgrade. Company got an upgrade yesterday.
No, I think they got it today, or yesterday was the breakout. It was up 5%.
No. This is the 5th. This is 4 days ago, my trade.
Okay.
So my technicals told me that something was happening before the fundamentals actually kicked off. Does that make sense?
Yeah.
So that's why technicals are really important. It was this moment right here, this day. I was like, oh, okay. And I got them. And then I actually got more at the close just because of where we were closing for a continuation. But to me, this was my primary target right here. And so we're talking about those imbalance levels. I don't have to be a massive believer in the stock to take a trade. And a trade is, again, just this one small piece. I don't have any interest in owning Intel personally. So I'm out of this trade here, but could it go higher? Yeah, it could, but I need to have another, if you want more, you have to maximum target 36 to me, near term. And then it starts to chop a little bit. But the move, this is very similar to one of those Palantir situations or Tesla situations where once you breach a certain level, the move from point A to point B, the velocity can be measured. And you can find those situations where the velocity can happen very quickly. Those are situations where, if you're a trader, you're taking calculated bets really over and over. That's all we're doing. It's finding a situation here where I could sit down at a blackjack table. How much does blackjack normally pay? I don't even know. I don't know. It's two to one. I don't know.
Yeah.
I could sit down at this blackjack table and I could look at this chart and say, they're going to pay me 10 to 1 on this bet. So I'm going to take it. Right. So that's really that situation.
Gotcha. It's cool, man. This is really interesting. And again, I know there's some people in the chat that don't really believe in technical analysis. I get it. But I think part of just having a holistic understanding of stocks is potentially looking at other ways that people make money.
Yeah. I mean, again, this one's just trade. I mean, I think it was I'll probably get a lot of crap. But if China invaded Taiwan and TSM was going to be in real trouble, then I'd be really long. I'd be really long Intel.
And Palantir, you got to be long both of those at that point.
Okay, but until it happens, which it probably will, I'm pretty sure that she said he was going to. But
I think some company ran a test on Deepwater. They asked 4 different AI models if China would invade Taiwan.
Sorry, guys, I didn't mean to. Yeah,
50% of them were yeah, we're definitely invading Taiwan. So.
Oh yeah, no. Well, he said we're taking back Taiwan, didn't he?
I mean, the Taiwanese president said it's not a question of if, it's a question of when they do it.
Yeah, that's what I'm saying. So I mean, I'll take him at his word. But yeah, so for Intel here now, I think as long as you're holding here, I think give it a couple days to breathe. Let this volatility come in if you can. So just as an aside, let me take this level down. So Intel. So now we rest. It doesn't have to be a long rest because remember this stock rested for 2 months already. So this is very long. The longer the base, the higher in space, right? That's the same. This was that $34 is a big deal level. This is where they last stepped in. If they come back in again, you expect this hold. So far it is, but it doesn't mean it's ready to break out until you're closing over this guy right here. So 35.29.
I would imagine even if I'm not wanting to buy calls like you did for July on Intel, if I was selling options, if I was wheeling this thing and I wanted to collect some premium, I could still use the same 70-day range you looked at and be like, oh, I think a strike at like $27 is reasonable given it's stuck in this range, whereas you thought a $35 call was reasonable. Like it kind of helps both ways, whether you're selling options or buying them.
Kind of. I think there's something to like be said about like knowing markets in general, like having been around for a while, is that very early on we said stocks go three directions. They go up, they go down, and they go sideways, right? So stocks are running, or they're resting. After a long rest period, the probability of a run becomes more probable the longer that something's been at rest. Conversely, after a large run, the probability of a rest becomes higher, right? So actually, I like to sell options after a very big run. And so what that looks like is like on Tesla, if you lock in a lower high after all these targets have hit, and that if you lock in, you make a new low, and then after making a new low on a daily perspective, you put in a lower high, boom, that second I sell, right? Sell upside calls or what have you. In something like this, I mean, you could have continued to sell puts for sure. But yeah, this was, I think that's important to know. Right now, Intel's on a run. So does it immediately go into a rest after having rested for 2 months? Maybe for a day or two, but it's probable. So we do these things called like moving average. They call like ping pong, right? So eventually, after this move, the probability of Intel getting to that 200-day and possibly even that 200-week, but the 200-day at 39 becomes more and more probable. But that could be a bit of a choppy run. But for right now, actually, if you're over 35.30, that's what the chart tells me that we should go to. And that's going to put it right into this area right here.
So given that thesis, if we don't give a shit about the stock, as you said, you don't really care about the stock, isn't it time for PayPal to get excited for call options at least?
Yeah.
Right?
Yeah, eventually, or Square. So we have to wait for the trigger, right? So Intel, just to show you, right? So Intel, the trigger, right, is important. Knowing something's there, but a trigger is like, okay, now if this, then that, right? If Intel closed over 3150, then that's a trigger, right? Or if it broke this high, it's a trigger. If it goes higher than this, then it's going to go. If it's higher than this, then it goes up here, right? So PayPal, we need to have that type of scenario, both invalidation and confirmation. So PayPal looks like it's still got a little bit more consolidated because this range is actually pretty big.
Yeah, I know you're right. It's not a tight range at all.
Yeah, it's not the same. It's actually a pretty big range. I think that PayPal, look, this 657 level is one where I would be a put seller around that area, maybe 55s. I would not be a call seller though. I'll just say that. So, and the reason for that is here's a 200-day simple moving average. Just really quick, let me take some of this stuff off. God, I have so many lines. Sorry.
Are you in this trade at all or no?
No. Because we want to trigger. So you have a high, new lows, right? So right now you have the first kind of inkling of possibly a higher low on PayPal. So when you first have this, the higher low is like, okay, you're likely not going down anymore unless you're below this, right? So if you're in a net long trade, you want to make this kind of your stop, or you can, depending on your time frame. But as long as we're holding here, then you can start to be a little bit more bullish. but it's not really until you get over this level. I would say here, we're getting real close. Just these yesterday's highs, right? So, or even this area. I'll just call it here, 59.77. If I get some closes over 59.77, this 200 day, which is that red line, is starting to flatten out. It's not in an uptrend. Like the slope is not up yet. It's still down, but it's starting to flatten out. So I think that PayPal is in a bit of a holding pattern for now. And maybe like Q4, if you have some catalysts on deck, that might become more of something there. But I think that PayPal in general, like selling premium is definitely the way to go.
Right. All right.
Similar. Yeah, Square super. So this is super flat, right? So this is Square. Very sideways. I think Square is probably more ready. Yeah. So these are getting really tight. All these simple moving averages. This is closer to being ready than PayPal, technically speaking.
Right.
Not quite there yet, but closer.
All right. Not bad. I guess Tesla's going to be the fun one over the next couple of weeks to.
Yeah. Well, a couple of days. I think NVIDIA, by the way, is ready. Right. So I think don't take your eyes off that one. And then Apple continuation.
Ready for what? For what? You're looking at 140?
Yeah, ready for new highs. I mean, this is basing. So remember, if this, then that. If closing over, well, first of all, it was if closing over to the 20-day simple moving average, break, over, hold. Then we go here. We got there. If closing over here, then we go 138.59. I think that's where we go next.
All right.
That's where we are.
It's gonna be fun, dude. I'm like
possibly extension. I put it. I don't. You have to go to my
your Twitter
profile. I try to put most of these, on like what I'm looking at. Amazon Prime Day trade. By the way, Bezos keeps selling at $200. He's pitting that stock right now, but it should be coming.
Buying Bitcoin, dude. Maybe that's what's going on. It's so because I spend a lot of my day reading and analyzing the macro, and so when I see the technicals and you're like, yeah, Nvidia's gonna make a new high, and in my head I'm just like, well, the Fed and Jerome was testifying today and he didn't, it's like, so
this is like Humphrey Hawkins, right? The 2-day testify, dude. They really rarely say anything important, but yeah, just go to like Paper Gains INC and you'll see a lot of this stuff, and what I'm looking at, etc. But I think, definitively it's going to be Thursday that the fireworks kick off. I have the very, it's very possible that the market preemptively starts to run tomorrow. So today, by the way, this is the cues. Last week I said, hey, it's a mega cap melt up week. That's what it is. This is like the most bullish week of the year, second most bullish, something like that. All we did today was we retested Friday's high. That was an important day to retest and level to hold. So we could have a continuation. Thursday we get CPI. That's the market's favorite indicator. Not mine, but the market moves a lot. And that could be
So what do you fundamentally think? Do you think CPI is, or do you care at all?
I care. I think of the 4 major economic data points, I have non-farm payrolls, PCE, personal consumption expenditures, PPI, and then CPI, right? So, but of those 4 majors, CPI is like the most lagging it is what it is, right? It's already happened. I think the most important is non-farm payrolls to me, and then PCE, and then PPI, and then CPI. But the market's favorite indicator is CPI. I'll give you that. So this is going to be a big deal, right? If we come in cool, then Tom Lee's right, and inflation's falling like a rock, and I think he is. But but if we come in hot, we're probably gonna hit rugs, man. That's probably what's gonna happen.
We tough if we're hot.
But know that's kind of what you're looking for. I think that's going to be the biggest market catalyst. The market likes to front run these type of things. Maybe tomorrow we get a nice pop, and then we'll see if it holds. So right after CPI, we get producer price index. To me, that's like, I think the market's starting to understand that producer price index is at least equally important than CPI, which is new and cool. But I think that's very important as well. That can pull back a lot of what we have, a lot of price action that happens after CPI if it's like inverse data. But you know, the trends are coming lower. We're gonna we'll see, right? We'll see. I think so far, as long as we're holding on the Qs, 459, 456, 59, that's last week's high. Look, we're gonna continue to the upside. That's what's true from a weekly perspective. So it was very similar for SPY. We're just coming in retesting that Friday high.
All right.
Thank you.
Awesome stuff. Jason's Twitter in the description. You guys can check him out. And again, if you're interested in any of his stuff, learning more about how he does TA, all of his links are in his Twitter, and you can get access to his Discord, all that good stuff. Cool. All right, Jason. I think this has been a fun. This is like a third Tuesday in a row. So I'm enjoying it.
We get a little bit more every time, so I appreciate you, dude. It's fun for me, for sure.
I love it. Thank you, everybody. Thank you, Jason. We'll see you next time. Bye.
Take care. Bye.
All right, cool. Good stuff, guys. This was fun. Again, we're learning a lot more about technicals, and I'm hopefully learning a lot more about just how to read these charts. I think it takes a while to get good at technicals, and for me, just these sessions and watching them happen in real time, it's more fun than like actually looking at charts and trying to figure out stuff on my own when you have someone just helping you walk through them, so that when I look at them on my own, at least I have a couple of takeaways from these sessions that I can apply. And hopefully that's also helping everybody else. This is our third Technical Tuesday, so I like it. Right? And I think Jason's enjoying it. So shout out to Futbucker. He's the one who actually connected Jason to me. And so it definitely takes a long time to get an understanding of it. And it's not the only way to understand equities. But again, as Jason says, I think one of the biggest takeaways is that it's telling you a story. And that story at its core helps you then decide what you want to do moving forward, which just makes you feel a little smarter, dude. I mean, that's the big thing to me. It just makes me feel like I'm a little bit more well-informed. I could still be wrong, but I have a bit more information when making my decisions. Okay, so tomorrow we are doing the market open again, 8:45. We do have JPow testifying again. I don't think he's going to say anything different. Today was the big day for questions. He's probably going to get grilled again by some other Congress members. So we'll be streaming that congressional hearing probably at 10 a.m. again. And then on Thursday, we have earnings officially starting. So we have CPI in the morning. I'll be live at 8:20. That's going to be a really big one. I think that's going to be the most important one this year so far. And then August will be the most important one after that. And then after that, we have Pepsi and Delta after the bell. So those are going to be the first two companies to kind of show us where the economy was in Q2. And then from there, we'll keep going and see what happens. All right. Awesome. Not bad. I got a daily Palantir episode coming out in about an hour. We'll go deeper into Palantir's partnership they got yesterday. And then tomorrow, we'll talk about the Oracle partnership that they solidified today and keep talking from there. Thank you, everybody. Hopefully you guys enjoyed. I'll see you guys tomorrow, 8:45 a.m. Bye, everyone. Have a good one.